Hello, traders. It is 8:09 Chicago time on Tuesday, the 12th of March, 2019. I had an unannounced software upgrade that happened at some point somewhere that I didn't know about and has reset all of my broadcast settings. So I had to download a bunch of stuff. I apologize for that. Technology. You'd think it would ask before it did anything, but it doesn't. Anyway, derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. As you may have guessed already, the overall market sentiment is to the risk side. Risk is on. Risk is on with crude oil leading the pack up 0.74%. The crude is trading at $57.20, up 40 cents or so. Gold is also up this morning. Now we got CPI this morning, which was in line, caused a small pop higher in the indices. The euro is also higher. The Nasdaq's leading the index complex. Um, by the way, you may have seen the announcement yesterday that finally I can speak publicly about the micro indices. The micro indices have been in the works for some time, and they're coming out probably the first or second week of May, pending regulatory approval, which is expected. That'll give us the ES, RTY, which is the Russell 2000, as well as the Dow. They'll be traded at 1/10 the size. 1/10 the size. This is something I've been pushing for since around 2012. I actually had a meeting with the CME early 2013 to try to push this along, and finally the product is coming out. It, you know, the specs are already online, and this is something that I think is huge for the online investors, so the online traders. So again, I think this is long overdue, and I'm really excited that this has come out. This was confidential for a long time, that this has been going, but now that they've made the announcement, I can talk about it. So it's a big deal. Anyway, again, it'll be 1/10 the size, 1/10 the fees, and then you have to add your commissions, your FCM and broker commissions, which often cannot be scaled down to 1/10 the size because their overhead is fixed. But in either case, it'll at least de-lever many traders and help many traders get off of simulators and on live trading at 1/10 the size. I'm very excited about this. This will be an awesome training tool, going forward, which is very timely for us at Convergent Trading, to bring people on and build the program around it. So all of that's nicely falling into place. So if you haven't heard yet, micro, ES, NQ, RTY, and YM, 1/10 the size, coming out the first or second week of May or so. Let's move on. Again, risk is on, although the DAX is lagging, the DAX is down. It's a bit of a mixed bag, really. I mean, yes, risk is on. We've put in a higher high overnight. The S&Ps went to 29.99, just short of the century figure at 2800. But we have a small gap, about 2 points so far. Looking at the calendar, as far as what's coming up still, we do have, Brainard actually already spoke. The only thing we have left is the API crude oil stock change, excuse me, which comes out at 4:30 Eastern, just 15 minutes after the pit close. The pit close in the indices. And so that's where that's the only thing. The market, it's clear skies ahead in terms of economic releases. Let's take a look at what we expected yesterday versus what we got. Now, remember, the market's been one time framing down. I talked about this yesterday. I outlined that we've been making lower highs, lower highs, lower highs, and so on. And we were opening in a gap that was that would put in a higher high, ending the one-time framing down. And the expectation is we would end up with a higher high, higher low, and a reversal up most likely. Um, and so it's pretty interesting to see that even though I expected the market to kind of uh, make a push higher in either direction, I did not have an open drive up as a potential scenario, mainly because of the action that we've had and the fact that we were in or around the 27 37 area. I expected us to hang out here for a little bit as opposed to a sort of a V bottom that was put in on Friday, really, when you combine Friday and yesterday's action. Yesterday's action was very strong to the buy side, but just hard to predict. I find that those types of, and I posted this yesterday on Convergent Chat that, hey, look, days like yesterday occur depending on the time. It's somewhere between 18 and maybe 26% of all days, and in general they occur, but they don't occur that often. And generally, these are bad days for me. Let's take a look at what I'm talking about here. Here's yesterday. This was yesterday. Let's clean this up. This is yesterday. So we open up and we one tick down and we have a strong buyer coming in all the way through. Now remember, we're in the middle of rollover here. The pace of the roll shows that we are at about 75% of where the normal roll would be, and the pace of the roll shows that we're approximately 60% of the full roll, but the full roll only ends up, about 80% of open interest rolls from one month to the next. So technically, if 80% rolls and we've done about 58%, we're at about 75, 78% of the roll being complete. Why am I mentioning that? Because even though I'm saying that this is an open drive, it may seem like it didn't have that much volume, right? The volume is kind of low. And uh, part of the reason for that is the roll behavior. People are doing calendar spreads or spread legging into the next contract as they shift their open interest from their position from one contract to the next. It kind of muddies the waters and it doesn't allow it to be very well read. Now take a day like yesterday where it's an open drive. It's an open drive. And during expiration week, we have quad witching Friday this Friday, expiration of futures, options, single stock futures, and so on. Um, it just makes it really, really risky for me to sit here and take breakout stabs. So yesterday, zero trades, zero trades. Yesterday and I mentioned this quote again also at Convergent, the old Benjamin Franklin quote, a penny saved is a penny earned. And yesterday was a penny saved, penny earned kind of day for my style of trading. It's important for us to recognize our weaknesses, the weaknesses in our trading approach and plan, and every plan has a weakness, and it's important to sit out when that weakness shows up. And that's basically what happened yesterday. So we left a gap behind. We left a small gap behind of about 2.5 points, and we had a pretty decent range on okay volume. Nothing really spectacular. So way off on my expectations yesterday. I did not really I did not do anything with it. If you did and made some money, good for you. Congratulations. But really did not I didn't have anything to play off of yesterday at all. In fact, I did. Excuse me, I don't know what's going on with my throat. In fact, I did see an opportunity right here, the pullback to 82.75. Um, uh, but there was nothing in the area for me to play for. But I did call out the 89 quarter being a likely top area, a likely struggle area. And the reason I came up with that is because it's a combination stock zone as well as a high volume node, but also we're starting to stretch the daily range stat on a day like yesterday. So I expected it to stall out at 89 and a quarter, hold there for a while, but I did anticipate that it would likely push through because it was forming a flag at the high with the point of control continuously shifting up through the entire session. Went from here to here to here to here to here to here to there, and it looked like it was about to shift to there. It didn't, and had it shifted, I would have been much more confident in the idea that we're likely to push through and get into 27.94 as the high. Didn't do that. In either case, it's just not my kind of day. I'm not going to chase a market that's already taken off, and there's no way for me to predict. In my approach, there's no way for me to predict that the move still has some fuel in it. But a day like yesterday, it's one directional. The tape was really clear that buyers were in control. The again, using the delta on expiration week is tricky business because of rollover. But overall, the large and very large participants controlled the auction yesterday. I mean, the large and small participants controlled the auction. The very large participants were sideways through a lot of it and then selling through portions of it. Again, tricky to read that on rollover week. So it's just again, volume has to be taken with a grain of salt. Um, then we carried into the overnight session. The overnight session has been mostly sideways. We did push higher right at the get-go. We went to 27.99 on the reopen, really, and then have been really drifting throughout the session. Very balanced. The volume's pretty good. We got a pop up on CPI right here. US CPI came in line, and we're holding steady at the mid VWAP below the point of control with a profile that's very clearly balanced. I'm running out of time here, so let's hurry through. What am I expecting going forward? My expectation coming into today is, oh, by the way, don't forget to sign up. In the description on this video is a link, and also if you're on the TraderByte page at Convergent, at the top of the page, there's an announcement for Ira Harris to come on our anniversary broadcast for our Trader Spotlight. It's going to be exciting to hear how a global macro trader trades versus my time frame, which is a day time frame. He's going to go over how he looks at things, how he puts on his positions, and so on. I think it's very, very useful for most traders here who day trade to get a perspective on what it's like for folks who look at the bigger picture to trade, OTF style. Anyway, so what are we looking for today? Little gap. It was a trend day yesterday, so the probabilities or the statistics are on the side of a reversion. So I'm looking for it to push, and I'm looking for a reversion back to the point of control. I'm looking for it to rest in here. It is Tuesday, a fairly volatile day historically. I'm looking for this kind of a pattern today, an attempt higher, and in the market likely to settle back down once it breaks into the century figure in the high, to settle back down into the upper range yesterday. Secondary scenario, if that does not happen, I'm looking for a responsive selling spree into the point of control, take out the overnight low, hold steady here, and then impulse out, hold sideways into the overnight point of control, and then push into 2800 and make an attempt above, but finish below the 2800 by the close. So the areas to pay attention to for today, Again, the from top to bottom, 2805, 2800, 2799 being the overnight high. 2795 is the overnight point of control at about an 85.5% historical probability of that getting tagged during the session. And then from there, we're looking for 2789 and a breach into the prior range and a push down into 2784, and it could push as far down as 2776 for today. Those are the key figures. I'll leave you with that. We have 5 minutes till the open. Again, really happy about the micro ES products being released. I'm doing a mini series for that in at the end of April to prepare to trade those. And I plan to do a lot with that because I think it would help a lot of traders who are not consistent stay in the game longer and give themselves a chance to actually make it. Capitalization is the biggest problem. Then it's psychology and other factors, errors and things like that. So this solves a big obstacle for online traders, and that's who I've been pulling for the last 11 years. Good luck, and I'll catch you tomorrow. Take care.